Hello everyone, my name is Lin Pei Shi. My project presentation is about the Qantas Group. Qantas is the largest aircraft carrier in Australia. It is the third oldest airline in the world. It was founded in November 1920. Qantas began international passenger flight in May 1935. It occupied 65% of domestic services and 14.9% of international service. Due to the COVID-19 crisis, the share price of Qantas Airways dropped from 6.67 Australian dollars in February to 2.14 in March. The significant reduction of service providing unfavorable future induced investors to selling their shares. By May 2020, the group had reduced 60% of domestic capacity and 90% of international service. More than 150 aircraft are grounded, or A380, B747, and B787 stopped operating. More than 30,000 employees were stood down, which was two-thirds of its total employees. The green line shows this year's international capacity. It declined dramatically comparing with previous years, and will still dropping towards zero. Qantas will also use some of its passenger aircraft for cargo-only service, as freight demand has increased due to the drop-off in global belly capacity. Since some of employees are going to leave without pay, Qantas is working with large companies, such as the supermarket chain Woolworths, regarding temporary job replacements. The Qantas Group announced that it had secured a further $550 million in funding against three of its wholly owned Boeing 787-9 on May 5th. The followed this followed the $1.05 billion raised in March against seven Boeing 787. The Qantas Group's net debt is now within the middle of its target range, at $5.8 billion. The group has no financial covenants on any existing or new debt facilities, and no significant debt maturities until June 2021. The group currently has $2.7 billion in unencumbered aircraft assets and can raise funds against these if required. After keeping some employees standing down, pausing on virtually all capital and operating expenditure, and revising agreements with key suppliers, the group expects to reach a net cash burn rate of $40 million per week by the end of June. At this time, Qantas Group announced these market updates on May 5th. The total short-term liquidity stands at $3.5 billion, including a $1 billion undrawn facility. We just learned hedging our course, which is a method to manage risk against the price fluctuation of products we are going to purchase in long term. Usually, firms are hedging against the increasing price of products by buying future contracts, so they can lock the price. So did Qantas Group. The Qantas Group's fuel needs were 100% hedged for most of financial year 20, which delivered significant benefits in the first half of the year. However, the significantly dropping price of oil caused by coronavirus crisis makes the company lose money from hedging. In early April, the group closed out its over-hedging position through to September 2020, which reduced the hedging loss at the end of the year. Meanwhile, the group's remaining oil hedging through to September is out in outright options, which means the group can choose not to purchase the oil if the price continues going down, reducing the hedging risk. Even though the travel ban still exists, the Qantas Group is still in good balance sheet situation. The group should keep its freight service with passenger aircraft. It is possible to reduce operational costs by removing seats in passenger aircraft for more space. The group should keep good hedging position for reducing risks of price fluctuation. While waiting for recovery of domestic service, the group can come out more innovative ticket packages and better loyalty program benefits for attracting more customers in the future. Thank you for watching.